Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 30th of April. And starting off with the S&P as usual. And here we've got rising 50-day line. We've got that resistance line there from March. Everything really around the 51.20 level. End of day close above that. And we're looking for a potential retest of the highs of the year through 52.50. Ideally, we get that by the end of next month. On the downside, a gap to fill towards the 50.50 area. So maybe that would be the first support for this market. If we break down, ideally we don't break down back below the floor of that rising trend channel from October around the 5,000 mark. Moving along to the Nasdaq, and here the picture not quite as good. We're not quite so close to the 50-day line there, 17,900, or the March resistance line there at 18,200. Want to see an end of day close through 18,200 to give us a chance of a big move up to the top of that rising trend channel from October, 19,500 by the end of June, the way things are going at the moment. But the key here is breaking that line of resistance there around 18,200 for this market. On the downside, not expecting anything worse than 17,000 or at absolutely even worse than that. The gap fill area, the January support around 16,700, but ideally we stay on the right side of 17,000. Moving on to the stocks, and starting off with BitOrigin, which we've looked at quite a few times before. Current position is that we're in a broadening triangle. We've had a go at breaking the 50-day line, $4.30. Above that, looking for that resistance line projection from back in November, $6.80 by the end of next month. The reason for the excitement here on a technical basis is that we've had a bear trap island reversal, so gapping down to the start of the month and then gapping up now, and that tends to be a decent charting signal, largely on the basis that the gap down would have got the bulls on the wrong foot, and then the gap up gets the bears on the wrong foot. So hopefully that will be a decent situation. Moving along to another stock which we've looked at recently, Branch Out Food, and here making good on that bear trap gap reversal through the 50-day line there at $1.90 or so. Above that, we're looking for the top of the range as high as $3.50 plus by the end of May. But the key here is staying above that 50-day line, which the shares seem to be quite happy in doing at the moment. Moving along to Coinbase, requested stock in fact, and here we've got just the signs of a right-hand shoulder there. We've already had our head and shoulders type pattern there for March and April, and then a sort of final attempt to go higher. The resistance there around $235. Recent support 206, and below 206 the risk of a test of 187, which was the old December resistance, and I suppose at that peak there that we had back in February. So this market needs to break 235 in a meaningful way to head higher and revisit the highs of the year. The other negative at the moment is that we've had a double failure at RSI 50. That tends to be a leading indicator on the downside towards the 180s on this market while we're below 235. Next up is a stock which we haven't looked at before, Elium Therapeutics, but we've got a V-shaped bull flag. We've actually already hit the top of the notional top of that rising trend channel from this time last year towards $6, and we're looking for that again while we remain on the right side of $4.50. That's basically the mid-range of yesterday's, or the lower third range, I suppose, to be accurate. So above $4.50, looking for $6 over the next week or two. Another situation on the move in quite a meaningful way at the moment is Fenbo. And in fact, we've already hit the top of that rising trend channel there from back in December. That was at $16. We're still looking for $16 to be hit or even exceeded while we remain on the right side of $13, which was the recent peak for the shares. In fact, $12.99. While there's no end of day close back below that, we're looking for $16 plus again. On to another winner in the near term, and it's HWH. Here you can see that we've had a massive gap down, but rising trend channel base here. The obvious place for the shares to retest is either the floor of the gap down back in January or the old support there from August last year. All of that really pointing to at least $4.70 while we're above the recent resistance around the $1.80 level. Ideally, we get another decent end-of-day close above that old peak there, $2.57 over the next few sessions. We covered this stock, the next stock, yesterday, and it's back again today, which is normally good news in terms of the bullishness and the charting working here. We've got a wide rising trend channel from back at the end of 2022, top of that channel heading for $16. We're looking for that by the end of next month, and even though that seems rather optimistic, the way the shares are moving, while we're above $6.90 and that old one-year peak, $16 still a valid target for either the end of May or going into June. Decent bounce on the next stock, Lichen China, and here basically a bear trap gap reversal, gapping up to end last week, in fact, and above the recent neckline resistance of $1.50, we're looking for up to $2.80 at the top of that broadening triangle from last summer. Another frequent flyer in the recent past has been Tech, and here we've got this V-shaped bull flag. It looks like a mid-move consolidation. That suggests that we should at least be able to hit $4.40 over the next few sessions, and maybe even revisit the old peak there from back in October as high as $4.80 over the next couple of weeks. Upside valued while we're on the right side of the $2.80 mark. Recent intraday support. My size is next, and here you'll see why. We're trying to bump along the bottom of this rising trend channel base here. The support in the near term has been the 50-day line, which is now rising. Tends to be a good signal above $3.60, and the 50-day line looking for as much as $8 by the end of next month. If you're cautious, probably want to see an end-of-day close through the $4.50 area, which would just or $4.60 area, which would just take out that late March resistance. On to the last three. The first one, relatively uncovered situation, Fibro, and here we've had a gap higher through resistance. The resistance in question around $13.90. We're looking for the shares to hit up to $19.50 over the next couple of weeks, especially while we remain above the old resistance from the summer of last year in the $15.70 area. So above $15.70, looking for $19.50 on Fibro. Stock which we've covered a lot recently, and there's a good reason for that. It's been rising well, is Poet Technologies. Here we've nearly hit our very ambitious target, which was the top of that rising trend channel, $3.30 plus. Hopefully we'll do that over the next few sessions, maybe by the end of this week, and then we can look towards the next level up, which is around $4.40. So $3.40 and $4.40 for Poet, especially while we remain above initial April resistance around the $2.30 area. Finishing on with Tesla, which once again underlines that you should never really bet against Elon Musk, especially for too long. Here we've had a bear trap gap reversal. In fact, it's a double bear trap gap reversal from below $160. And the initial target we had there at $190, rather sheepishly, on the previous update, has been exceeded. That means we're looking for a new leg higher, which will come in the form of the line I'm about to draw, the upper parallel of that, which is heading for $220. Ideally, we get that by the end of next month, and ideally, we stay above recent resistance around the $178 level. So above 178, looking for 220 there on Tesla, backed by the uptrend line in the RSI window, which showed the bullish divergence despite the lower lows there for the previous week. That's it for me today. More updates tomorrow.